Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So yesterday we talked about the perspective of the market. In the nearest term, because some mixed patterns have been forming recently, first glance it was forming something bullish, and it seemed that market indeed could show some deeper retracement. But based on recent price action, it was really very rude break of the normal bullish tendency in how it should develop. So it has been crushed and break right in the middle and halfway to the target, and that usually very rare could finish with no consequences. And usually it leads to some continuation in the direction of breakout. So, and by these reasons, we have come to the conclusion that indeed maybe market is ready to, has more chances to show deeper retracement, another swing down, at least another swing down. But personally, I still think that we could go straight forward to the target, which is 1630, 1650 area approximately. So no barriers exist currently. We have no oversold here. We do not have any strong support areas. So actual market here stands in relatively free space. And the first glance, as we said yesterday as well, you could see the wedge pattern is falling wedge. Usually it treats as a bullish pattern because it shows this housing of the bearish power. This market slowed down on downward action. But in the modern market, guys, wedges very often leads to the continuation. And in the case of the continuation, the price action even shows the acceleration, and the breakout stands in the same direction as market is going before the wedge. Usually it stands with the acceleration. It happens because those traders who are in habit with the classic school of the trading, usually when they see the wedge, they think that, well, this is probably signs of reversal. Also, they see the divergence that we discussed recently, and they think that this is a really bullish context, and they intend to go long. Once they bought and opened the positions, placing the stops here, market breaking it, triggering the stops, and get the acceleration. So that's the reason why the breakout of the wedges usually leads to the furious action. So currently we're coming to the target actually that we discussed recently. It's around 1760, 1770 area. But still, guys, I think that, well, maybe some response will happen on this target, but I wouldn't count on really something significant. And by my view, I suggest that, well, there's more chances, at least for me personally, that market will go lower. So it still should complete the target. Another reason why I think so is just, if you remember yesterday, we talked in parallel analysis with the British pound, and take a look what's going on here. We have the same grabber, market standing lower, but it still keep these lows untouched. So it is yet to be reached, and it means that market should drop here below them. With this downward action, it means that on the euro currency probably some downside continuation happen as well, because currently euro currency looks heavier based on the statistics that has been released in this week. It was poor statistics on the sentiment, poor statistics on demand for Germany goods outside the European Union. So that was really some shock for the traders, as everybody thought that recovery stands on the way, but statistics shows that it's not yet. And that was actually leads to the depression in euro currency, and this collapse recently has happened. It means that on intraday charts, first on the fall time frame chart, although we still will keep an eye on this level, 1768, 1780. This market stands right now, so this is so-called, as we call it, as a third drive. It's not, of course, the perfect free drive pattern, but still, this is level that we have suggested. But keep in mind that, well, overall context for recovery, for a pullback here, stands really weak. And if you intend to take the long position, first of all, of course, you could try to use these patterns and something else, but trying to, first of all, place tight stops, because overall context stands bearish and chance on downward breakout looks better. So just to not take too much risk on this trade. Second, if you would like to go long, try to get clear patterns on your back. So, and place the trades only with the patterns. For instance, if we would get this head and shoulders, this will be a nice opportunity to take the long position around 1830, right? Because you will be able to place very tight stop somewhere below the head. And it will be some background that you could use. But currently, well, of course, we could treat it as a free drive, probably it is. And you could try to take a long position with the stops right below this area. It's very tight stops. But chance on recovery and the depth of recovery hardly will be significant. On the follow time, on our chart, we also could consider different ABCD pattern. This is actually the pattern that stands on the CD leg on the daily chart. So actually, that was the, I will show on the follow time frame chart. This is our large ABCD. This is the COP. And on the hourly chart, our ABCD starts from this point, A, B, C, top, D pattern. So this is some minor ABCD pattern that stands inside of the larger swing. Here as it is. So this is ABCD pattern that I'm talking about on the hourly chart. And take a look what has happened recently. Our free drive, triple two has triggered to the downside. Market hits the COP of this ABCD pattern right around 1790. So this is mostly the reason why market chose this. So kind of the consolidation and reaction in this area. Maybe, I'm not sure yet, but it seems that maybe some kind of the downside continuation pattern could be formed here in the shape of the maybe triangle or something of that sort. So here's market shows some consolidation. Here's we also have the bearish grabber. It suggests that taking out of these lows, that has not happened yet. Theoretically, the market could start dropping again. On the pullback, most probable that will be somewhere to 1824, 1850 area, but mostly we are still keeping an eye on the same 1850, 1860 that we have mentioned yesterday. So this is, for a short-term bearish context, this is important level. So if we're correct on the downward continuation, market should stay below it. So for all the positions that we have taken already, you currently could think about the tagging of the stops, maybe even to the break-even. So for instance, if you sold the euro around this area recently, you could just tight stop right above this area. So for those who taken even earlier, bearish position somewhere on this retracement is much better. So that's currently actually what we see on the euro currency. As I said, on the bullish context, of course, you could try, it's not forbidden, but personally, I have no intention to do this. So overall context is bearish. And personally, I would better to consider any rally for selling. So if we will get some upper direction and we will get something, some clear pattern, something like here, maybe some ABC retracement or something of that sort, I think that this will be, might be considered for taking short position again, because we are still on the way to the major target, which is the 1630 and 1650. So this is our view on euro currency today.